Hi everyone! This presentation assesses the financial statements from 2019 and 2018 for Walmart. I will compare total assets, liabilities, equity, revenue items, and cash flow activities. Here's a brief overview of what we cover, kind of as I just said on the previous slide, but as you can see, we will be discussing differences in several of the key components of each financial statement. Here's a section of Walmart's fiscal 2019 10K annual report, and we are comparing the total assets of the 2 years. So as you can see, the total assets for year 2018 were $204,522,000,000. And then for the total assets for 2019, it's equivalent to $219 billion, $219,295,000,000. Reasons for this difference, there's in the total current assets, it's increased by $2,233,000,000. And then the total long-term assets have increased by $12,540,000,000. So there's the highlighted portion of goodwill on the bottom. And the goodwill is increased due to the acquisition of Flipkart. And Flipkart is an Indian-based e-commerce marketplace. The purchase price was allocated to assets, liabilities, and non-controlling interests, so we will see the side effects of it later on in the presentation. And then there were also changes in currency translation. Now we're going to compare the total liabilities from fiscal years 2018 and 2019. And so as you can see, the total amount for 2018 is less than the total amount from 2019. And the reason for this is, well, actually, so the 2019 balance, the current liabilities actually decreased by $1,044,000,000. However, the reason that the liabilities have increased from 2019 to 2018 is because of the long-term liabilities. These long-term liabilities have increased by $17,005,000,000, and most of this long-term debt is the reason it's increased is mainly from that Flipkart acquisition that I had previously mentioned. Now we get to the final component that's going to come from the balance sheet, and that's comparing the total equity from fiscal years 2018 and 2019. So as you can see, there has been a decrease in the equity from 2018 to 2019, and that's majorly due to a decrease in Walmart shareholders' equity, which has been from about $5,373,000,000, and then there's an increase in non-controlling interest by about $4.3 billion due to the purchase price allocations from Flipkart. And so that means that the total equity has decreased by about $1,188,000,000. Here we cover the revenue items that are on the income statement. So the revenue items on the income statement are net sales and memberships and other income. With net sales, the amount is the total of net sales of the U.S. Walmart, International Walmart, Sam's Club, and corporate and support. And this number is seen in the highlighted yellow box under 2019, and then it's broken up into which amounts are allocated from which companies underneath. The company recognizes sales revenue, net of sales, taxes, and estimated sales returns at the time it sells merchandise to the customer. E-commerce sales include shipping revenue and are recorded upon delivery to the customer, and additionally, estimated sales returns are calculated based on expected returns. Also, the membership and other income. The other income is primarily composed of gift cards, financial and other services, and contract balances, but the main sources of the revenues here are the membership fees and the gift cards. The company recognizes membership fee revenue both in the U.S. and internationally over the term of the membership, which is typically about 12 months. Membership fee revenue was $1.4 billion for each fiscal year from both 2019 and 2018. And then the membership fee revenue is included in membership and other income in the company's consolidated statements of income. Deferred membership fees is included in accrued liabilities in the company's consolidated balance sheets. And then the gift cards, as I mentioned, it's whenever the customer purchases of gift cards are not recognized as sales until the card is redeemed and the customer purchases merchandise using that gift card. Next, we get into components of the cash flow statement: operating, investing, and financing activity totals. So we're starting with operating activities, and below I've described opportunity activities as inflows and outflows of cash related to transactions entering into the determination of net income. So net cash provided by operating activities was $27.8 billion in 2019 and then $28.3 billion in 2018. So we see a decrease there. Net cash provided by operating activities for fiscal year 2019 declined when compared to the previous year, as I just mentioned, primarily due to timing of vendor payments, but it was partially offset by lower tax payments, mainly resulting from tax reform and the timing of tax payments. Then we have investing activities. And investing activities are just typically involved in the acquisition and sale of long-term assets used in the business and non-operating investment assets. So net cash used in investment activities was about $24 billion in 2019 and $9.1 billion in 2018. These amounts are seen at the bottom of the image on your right. And generally consisted of payments for business acquisitions and to expand our e-commerce capabilities, invest in other technologies, remodel existing stores and clubs, and add new stores and clubs. The net cash used in investing activities increased $15 billion for fiscal year 2019, which is a pretty big deal when compared to the previous fiscal year. This increase was primarily due to almost the $14 billion payment for Flipkart, which has been mentioned before, and as well as a couple other smaller acquisitions. The last component of the cash flow statement are the financing activities, which involve cash inflows and outflows from transactions with creditors and owners. So net cash used in financing activities generally consists of transactions related to our short-term and long-term debt, financing obligations, dividends paid, and the repurchase of company stock. Transactions with non-controlling interest shareholders are also classified as cash flows from financing activities. For fiscal year 2019, net cash used in financing activities decreased by about $17.3 billion when compared to the same period in previous fiscal years, like 2018. The decrease was primarily due to the billions of dollars of proceeds received from the issuance of long-term debt to fund a portion of the purchase price for Flipkart that has been mentioned in almost every slide, and for other general corporate purposes, as well as a decrease in share repurchases due to the suspension of repurchases in anticipation of the Flipkart announcement. Here's the concluding summation of the presentation. Our assets on the balance sheet and revenue in the income statement have both increased in 2019 from 2018, and we see the effects that the acquisition of Flipkart has had on the statement of cash flows and all the other financial statements. It's been pretty drastic, as one can tell. And I just thank you so much for listening to this presentation, and I hope you have a wonderful day. Thank you.